Good morning, boys and girls. Welcome to the Flow Show. Lots going on today. Some actual price moves to deal with as well. All looking good. Hope you're doing well. Morning, Kay. How do you do, mate?
Hey, good morning, Ryan. Good morning, everybody. Yeah, feels like we have already a whole day behind us.
Yeah, good, because we had nothing to do the last couple of days. So nice to get some moves to get stuck into.
Yeah.
And a few bits going on, which we shall kick off as we always do in China. The big news is that the PBOC will cut the RRR from the 5th of February by 50 basis points. That had been touted as part of what's in their toolkit that they may go in the early part of this year, and they've decided to do so even after leaving those prior smaller different rates unchanged. They've pulled the trigger on that. We saw a little bit of a pop in Aussie dollar and other markets as well, CNH moving as well. Nothing major or massive. As I say, it was pretty much well touted. And again, these are measures that are more tilted towards the domestic side of the economy, which is good for them, but it doesn't really change much on the other side. So they're starting to move. It is a pickup of action, shall we say. We've been bemoaning the fact they've been a bit quiet on taking bold steps. We had that news yesterday, that 278 billion funds they're going to put to use for buying stocks. Today we've had more short selling restrictions placed by regulators. So they're starting to move, officials over there, bringing out some of the big policy action there. So you wouldn't know it in the stock market, though. Just looking at China stocks again as an indication on how that news has gone down. Bit of a bounce, as you can see there, but compared to the trend, we're not starting to retake this trend just yet. So the market's still not quite ready to buy the dip in Chinese stocks just yet. Got signs that we've at least stopped going down. We had the low, then we're just seeing a low just above that. So maybe the tide is turning. Want to see a bit more price action down here before determining that. So it could be yet another dead cat bounce. So not the strong move that they may have wanted or expected, but time will tell how that's going to play out. Over in Japan, we've had some data out overnight. Let's get on the right page. Trade data coming in. Trade balance moving to a surplus from a deficit. As usual, pretty wild numbers coming in here. The important part is the activity numbers. So exports up 9.8%, beating expectations and turning around the negative number last month. Imports, unfortunately, coming in softer than expected, but not as bad as last month. So bit of an improvement on the trade stuff there in Japan. PMIs as well coming in moderately positive. A bit of an uptick for services and a pip better than last month on manufacturing. So data at least edging back in towards more positive territory. We've had more comments from the business lobby, Kind and Ren, saying that they're aiming for wage hikes that outpace inflation in the upcoming labour talks. The vice chair, Koji, said that companies must improve productivity to secure the source for sustainable wage hikes. Kay, quick thoughts on China and Japan there? China doing what they threatened to do last.
Yeah, finally, Japan. PBOC came out with a bit of a dovish line at one stage, saying that they expect the interest rate gap to narrow, and that would leave them more room to move. That was originally taken as a little bit dovish, actually, meaning that they may cut rates when the US will start to cut rates as well. On the other hand, yeah, the RRR is good. The Chinese, that famous Chinese government body, and I think that's the one that had been created last year, perhaps. Oh no, it's just the China Forex regulator. They also said they will actively support developments of the offshore yuan markets. Um, it does seem they do come up with stuff where they think, or at least hope, to turn those markets around, or at least make them bottom out. But as you say, and as we've been saying already, it all depends on whether the investor is going to buy it. When you look at the local markets, it's been a bit ish, but if you look at those trading on the, let's say, still markets that are more open, like the China A50, which is traded on the Singapore markets, and the Hang Seng Index in Hong Kong, they have rallied quite a bit. So there are perhaps some signs, but it's not going to take a couple of statements and a day or two of better. This is just a rebound, right? This is not really a turnaround. For a turnaround, we'll have to really wait. Those moving averages that you showed there, I guess that there's a few of them, few of those investors watching those, because they have kept the maneuvering in all those indices pretty well of late. So we're going to have to wait and see. But there's always a bottom for something at some point. So it may just be that they start to succeed in stopping the rot there a bit. Something interesting to watch, especially going forward in the year, because PBOC now also attaching a lot of importance to what the other central banks will be doing, talking about those differentials. So that I found an interesting line there on those comments. Then moving on to Japan, we've seen those green shoots already a number of times, right? Just to then be followed again by worse numbers. I would say it's hopeful. It's always hopeful. It's a good number for Ueda to continue to plan. That I think is a good thing. Now today I don't know whether it's just purely the dollar turning around, but again, if you only look at the dollar yen, it's found again resistance in those high 148s, which I think is quite interesting. Now we have to wait and see again what's happening on the other side. JGB yields have ticked up. So the Japanese market, not really on the first day or on the day of the announcement of the Bank of Japan, but the next day have sold a few JGBs, and the JGB yields have ticked up a little bit. They're back above 0.7%. So we'll have to watch the developments there, because if they continue then to tick up, I think that could underpin the yen in some form.
I was looking at that. I've seen a few comments, people saying that it's increased hawkishness over the BOJ, but I tend to think it's more a bit of a reaction to what we saw yesterday in yields in the rest of the world, where yields popped up, and maybe Japan doing a bit of follow through, when they came to town after.
Exactly.
Because it's a bit of a delay between the BOJ and then suddenly everyone going, oh yeah, they're hawkish. So I'm not sure those comments were right. It's maybe a bit more of a follow trade.
I would argue though that those 10-year JGB yields did not move when the rest of the yields were creeping higher. They merely put in a couple of BPs when all the process where the US yields, for instance, the 10 went from 390 back up to 410, 415. JGB yields didn't move. So there is a little bit of the BOJ in there, perhaps a little bit of those green shoot numbers as well. But it's all still small stuff, right? And all still, I would say, potentially fragile. The first bad number out of Japan, everything could be undone already. So it's one to trade day by day, and not really, because again, as I've been repeating, the interest rate differential is big enough for if you're long yen, time is really still playing against. But on the shorter term, on a day-to-day trading, it could be that if we get some decent numbers, if we get those wage talk going positively, that on a day-to-day basis, the yen could in times gain a bit of strength. It was just looking at all that combination that happened over the past 24 hours, let's say, in Japan, and there are a few interesting things going on.
Yeah, definitely, mate. Right, just before I move on, there was another headline out of China where it was cited that officials are going to increase financial cooperation with Hong Kong, which is something, if you're trading the Hong Kong dollar and keeping an eye on that band that they've got in play, 775 to 785, there may be some influence coming in from China. Of course, Hong Kong is part of China, so they're really only cooperating with themselves, officially, unofficially. But I know it's something you've spoken about before, Kay, that the links between them might become closer and closer. So it's just a headline to keep an eye on for the future, and what it may bring to FX news. You might get Carl Bass popping up, trying to take on the band again, and probably losing money again as well. Right, on to New Zealand. Had some CPI data out, which on the face of it came in all as expected. Lower CPI year on year, quarter on quarter. This is Q4 data. But the Kiwi popped on those numbers. The reason being there's some underlying numbers, a bit like Canada and their multiple efforts to gauge CPI. And one of these measures came in a bit hotter. I can't remember what one. They've got a tradable and a non-tradable CPI or something.
That's the one.
Came in higher.
The non-tradable inflation came in at 5.9%, which was higher.
So that was the kicker for Kiwi. If you were wondering this morning why that took off, that was because of that particular CPI number within the rest of it. Anyway, S&P Jordan says that nominal appreciation of the franc has lowered inflation, and that franc appreciation has been hurting Swiss economies. Says that the inflation situation is much better in December than September. So slightly dovish tilting comments, those, or unhawkish comments, I shall say. Germany's IFO says that they have cut the growth forecast for 2024 to 0.7% from 0.9%. They've done nothing but cut forecasts for the last year or so. There's more strike trouble in Germany, with pilots voting for a strike at Lufthansa's Discover. Not sector, what do you call it? Whatever it is. Part of Lufthansa's team, Lufthansa Discover. There's strikes going on there. That comes on top of the train driver strikes that spoke about yesterday. PMI day continued into Europe. We had all the Eurozone, the main Eurozone flash numbers. France, similar story across all of these. Manufacturing up a bit, services down a bit. So manufacturing there improving a little bit, services getting worse. Germany the same, up on touch on manufacturing, but down on services. And then the pan Eurozone number going the other way, up on manufacturing, and then coming down on services. UK came in much stronger as well. 53.8. Services is the biggest number for the UK PMIs. 53.8, beating expectations. It was expected to drop 2 pips, but it put in a positive number. Manufacturing less crap at 47.3, beating expectations, and up from 46.2. So we're still seeing a bit of that UK exceptionalism as is being touted around. So Euro sterling, obviously, seeing most of that move there. We had another little dip. We're certainly getting under 85.50 now, and looking like we could be on for a test of the 85 level. Still got some little bits and pieces in the way. Pulled up this line I've had on my chart 35. more just a watch area than a trade area. Then the next level is going to be into 85.20, which has been prior protection, and then support after moves to 85 and below. Big figure 85 is the number. 84.90, maybe down to 84.80, which is my zone down here, which if I start putting it onto a longer term chart, you can see it's been a bit of a traffic area going back some years. That's why I've got it there, because it's one of those big levels. When we get there and haven't been there for a while, you know something's going to happen. Potentially for this one, as been saying, the stars might be aligning for a move there, a break, a hold over tomorrow's ECB. I think on balance with the ECB, this level is going to be decided by whether they're obviously pushing back against early rate cuts, or whether they decide that this inflation jump is temporary and they need to act on the economy, i.e. cut sooner, or whether this rise in inflation that they've been expecting and telling us about is going to perhaps prove a bit more sticky than their forecasts say. In that sense, there will be more higher for longer. I think on balance at the moment, mate, I think even if the ECB aren't dovish enough for the market or sound hawkish, a rally's going to get hit because the trend has been all about the difference in data between the UK and Eurozone.
Yeah. We are continuing to see those how would you call them, huge differences, but still, I mean, it's psychological as well. You know, you've got the services PMI in the UK above 50, which is expansion territory, and the Eurozone uncomfortably under 50 with all their indicators. So I do think it's going to continue to weigh on that euro sterling. For now, it's a slow process. It's also not like the biggest traded pair, but it is one of the good pairs to trade in when you're in the European time zone. Yeah, I think we are, and that will reply to Ali as well. I'm still a bit short, mate. I'm just watching this and 50-60. If we start to cap there, we've seen several times bids coming in under 50 and then taking it back up to 60, but it's already offered now in the 60s, right? With those bounces up into the 60s have found sellers. So I guess it's just like we're in this slipping and sliding box, you know, and yeah, the peak level will be 85, 84, 80. That's going to be the big zone. I'm going to be very happy to take most off if we get into 85, the figure. It will be time to review the trade, let's put it that way, because the level is big enough. Okay. That's how I view it. Well, yeah, there's not much more to say about it. I think it's just on that slippery slope, and we'll go down, even to test the big zone again.
Yeah. I think I'm going to make a decision. If we'd have traded down here well before the ECB, I might have added back to my longs. But now, you know, the data is still favouring the UK, and this pair. If you want to trade fundamentals, this is a great cross to trade when you've got diverging fundamentals or diverging central banks. You know, it's much cleaner to trade something like that than say cable, which can be up and down like horse draws on anything. And the US dollar is going to be, you know, paramount in that pair because it does move fairly slowly. So it gives you time to see, you know, pretty much all this move that we've seen the latter part of the year and early this year has been on the fact that the UK is better on the data front and the Eurozone data is looking worse. So there's not many assets you can trade so cleanly, which is why I like it. And as I say, it's low volatility, so you're not going to get, you know, smashed on a 200 pip move all of a sudden, unless there's some huge headline. So it's very low risk. It's a great pair to trade. But yeah, I think
big
sitting in now, if
a low risk, but big pips though.
Yeah,
they're sterling pips. Big pips.
Big pips. Yeah. So I'm to look at a trade for tomorrow's ECB. I think if they do put a strong push back against early rate cuts, and it's the higher for longer message over what's going on in the economy, and we get a bounce in this and it's decent, I think I might fold the rest of my longs and maybe turn short. But I want a decent rip, maybe 86.5, something like that. Then I'll think about it. Otherwise, I'll just wait and see what happens. But I definitely think I might be looking to see what happens if this continues down after the ECB, and then maybe look for a break trade and reverse to shorts if that 85, 84, 80 level goes. But we'll see what happens tomorrow with that one. Yeah, go on, mate.
Yeah, right. And if I may ask you so if because it's a big if it would happen that we see the break, okay, where do you think there's a reasonable target? 82?
Definitely down towards, well, it's going to be low 84s first, down around there. Where am I going? Down around here somewhere, because we do have another bit of traffic down there as well. So that would be a reasonable target. But then, yeah, maybe 83s. I think 82s would be a stretch. You'd have to see this data divergence continuing. But I definitely think we get under there 84 at least, maybe down to 83s. But I think down there will just become too tempting for buyers, and I can't see the UK being that much more exceptional than the Eurozone.
Agreed.
To
I think so too. That's why I'm going to take most off if I see that 85, and then see if we get the break. Perhaps accompany the break again, but I see, on the really long term, the Brexit, the whole Brexit thing, and still people are still discussing on what was the real top in euro sterling. But I see the 50% is around 82.15, 80, yeah, call it 82.15, 82.5, depending where you put that high. It could be a target, over time. But I think if really we get down there, it'll be really time to review everything, because I agree. There's going to be a time where this UK EU divergence may turn around, and or just disappear, and by then we will probably already be in who is cutting when and by how much, which is probably going to make the second half of 2024 potentially a more difficult trade in this one.
Yeah, and you've also got to rely on the UK continuing to perform as it is, which, as we know, we're always one data point away from a complete collapse in the quid, as some market players like to have it. But yeah, for now, it's going the UK's way, and we'll see how it all ties up with the ECB tomorrow. But we can talk about that one tomorrow in more detail. Coming back to the data, we had a few bits and pieces out from the US yesterday. Richmond Fed coming in a little bit soggy, another one of the regional manufacturing indices there. Services saw a bit of an improvement there. We obviously got the US PMI today as well, from the S&P Global one, not the ISM one. So we'll see how the US is faring in manufacturing and services. We also got the Philly Fed non-manufacturing, that's a services activity number, which is never on a calendar still. That came in soggy at -3.7 versus prior 6.3. New orders, though, improved to 1.9 from a negative 5.7. Employment was better as well, 13.9 from 8.3. And the prices paid number was up as well, 33.8 from 31.8. So all the other components going up, which makes you wonder how the index went down. But I don't make the data, I just read it out. In the auctions, probably the bigger one, the 2-year note, 60 billion, went off pretty much okay. It was a slightly lower bid to cover on that one at 2.57 versus 2.68%. The other numbers, directs, indirects, one was up, one was down. Sorry, they were both up over the previous, my mistake. Again, given the amount that's gone off, that lower bid to cover is not going to be too much to worry about. They all went off. Kay, did you see all the other numbers for the rest of the bonds? I forgot to pick them up this morning.
No. So today, yeah, I've got them.
52 yesterday.
Do you hear me?
Yeah.
Okay. So today we have 5 years, which could be interesting, and the twos, I guess. Yeah, twos and fives, but yeah, but yeah, the twos is something different, but yeah, especially the fives as well. Yeah, so there's more to come, and tomorrow we will have the 7 years. So there's still a few interesting bits and bobs to get through on the bond issuance side.
Yeah. Right, job cuts. eBay, the latest to say they're going to cut 1,000 people in certain roles, which is roughly about 9% of employees. They've requested that all US employees work from home from today. They say the headcount and expenses outpaced the growth of the business. So it's yet another big firm, a tech firm, cutting jobs. Bosch, been speaking about those guys as well, and I didn't realise there was actually 1,500 jobs cut or announced last December, but now they're adding another 500. So it's 1,500 in December, the 1,200 we announced last week, and another 500 to go. And this is all in their auto part of the business. So I'm going to keep noting all these because it is a trend, as we've been saying, all these job cuts. Still not big, massive numbers, but as I say, it's a trend that's an important at the moment. Donald Trump cleaned up at the New Hampshire primary last night. Not as big a win as was expected, but it's all a lot of people and commentators saying that's all but secured his challenge for the presidency, at least from the Republican Party's point of view. Nikki Haley is staying in the running, but she's got to go some big guns to pull that back. So it looks like it's a Trump versus Biden fight off again. He won in his primary in the same area as well last night. So that's what looks like we're setting up for from the US elections. That's all I've got at the moment. Okay, you got anything else you wanted to bring to our attention?
No, not really today. I guess we will look at a little bit of those US PMIs, Canada, the Bank of Canada, and really Bank of Canada. I have very little view on what they may change or not. It's going to play on a few words, I think. I'm not seeing this time, actually. I'm not seeing too much that needs to be changed anywhere. They had, like in the rest of the world, a bit of an uptick in their inflation data, but the market is still pretty worried about housing and stuff. But I don't see them change much today. It may be follow the money kind of reaction if I would do anything, and I've got really very little plans of doing anything at all on the Bank of Canada today.
Yeah, I think it's going to be a case of, we know they like to change up the weather over there, Macklin as well. So they're obviously going to pay lip service to inflation. It's just a case of whether it's scared him to sound a bit more hawkish or whether he's just going to brush it off as a temporary jump there. Then we saw the jobs picture looking a bit softer. Retail sales have been softer. So there are elements of the economy in Canada that suggest they don't need to be hawkish anymore. So yeah, a bit of a coin flip on this one. It is a monetary policy report meeting, so there will be a presser, whatever it is, an hour, 45 minutes after the announcement. I think we get all the forecasts and whatnot coming out of that. So that will probably be the bigger thing to watch out of the announcement. But price-wise, I don't see any scope for any range busting moves. So I think, look at the edges of the recent ranges, certainly probably down to 133.5, 40, this area of support down here. if it's a big enough move, that might be a decent stretch point. Conversely, up into the high 135s towards 136 is your top side area on a fairly decent move. That's certainly where I'll be potentially parking my fishing rods if we get something like that. Anywhere that pisses around in the middle here, I've got no interest in that whatsoever. But also keep in mind what the dollar, particularly for this one, what the dollar is doing generally. So if we're seeing a really weak dollar and they say something dovish, that might be a rally that gets hit soon after, as we go back to the general trend du jour. So it's always worth noting what currencies, other currencies are doing going into these announcements. Right, so cable, let's start there as we had that decent data. Caused a rally up to 127.73. I knocked a bit of my longs out from last week up there. Couldn't get even close to this prior resistance area in the 80s, and as we creep into 128, already running out of puff. A bit of par for the course of what we've seen, data moves and the like. They have a move, they run out of puff. I wouldn't be surprised if we go all the way back down to no 127s after a bit of time. We've had plenty of this up and down yo-yo action going on. Euro dollar as well. It's had another little poke up towards this 109, 109.10 area, but fell short again. So this is becoming a bit of a level now. It was already a bit of a level, but it's become more a bit of a level. We've had a few tests here. So, yesterday the world was looking very poor for the euro. People talking about a breakdown, 108, would we see 107? And then come in the next day and boom, you're back up at 109 again. So if we get above here and start to hold above here, then that maybe sets us up just to move into another small range, maybe from there to 110 or something like that. Or we could just wishy-washy through the level and then we go back to being boring. So this is still a bit of a pivot line. If you get a break, the break needs to hold. If it doesn't, we're back in the range and moving around to that. Dollar yen, still bleeding off from the highs made yesterday. Got up to those highs yesterday evening, and now we may be having a creep back down to the 147. I never like a price that comes back too quickly after a test. So keep an eye on that if we do get a move down there. Because if we do break there, then it could be a pretty fast move, maybe down to 146.5, if not more. But if it holds there again, then it's going to keep this range intact for now and gives us a bit of area to ping pong around. Kay, did you want to have a look at any bits and bobs?
Yes, I can. Yes, I can.
Anything going on in the CAD crosses that might be worth looking at? Put you on the spot.
Really, on the Canadian crosses.
Let me guess, Euro CAD's at 146.5.
40. I mean, 146.40, 146.40, 146.40, 146.
Yeah, old mate. Yeah.
But that's why I'm saying. I mean, is there really something to do in the Canada, right? Because this thing could just just continue to just ping pong in that zone. I'm not sure that the Bank of Canada will be able to take it outside of this zone here for 520 to we could potentially go and have a little testy here just around the 147 zone, but I don't know if there's a potential to even go and reach for the 148. No, dollar CAD is really 134, 135 and a half. This one here, the 50% capped it last time, and we've got support around 134. And for as long as we are inside that range, I'm not even going to look for more. Yeah, I know, Joao, right? I mean, I need to do something about it. I changed a platform well, not the base platform, but I've changed the account, and I've lost all my colors. I'm sorry about it. The what perhaps there's one here that we can pay attention to, and that's this Canada yen. It's trying to break free. But in line with dollar yen, we've come back from those higher levels. If there would be something really hawkish on the Bank of Canada, and we start to hold on a close above this 109.90, call it 110, then there is a possibility that we are going to go back for a retest of the 111s perhaps. But also there, it looks to me very much as a rinse and repeat. I'm not sure that a dovish Bank of Canada could take it even down to the 107, but just like a lot of those yen crosses, we are in medium term territory, still banging up against highs. We are not like trading lows, okay? So that still tells us that the market is not really won yet on the yen's cause either. But that is maybe one. I'm not looking at any other of the Canada crosses to be yeah, and I'm not even looking at any other cat crosses. Aussie, are we coming back above 66 and we're rejecting it again? 66.10. It's a bit like your 109 10.15 on the euro dollar here.
Yeah.
And it's capped around again. We tried it again this morning, capped again around 66.10. This really needs to clear this area, and ideally clear this one too, and that's going to come in around probably 2025. If Aussie manages on, I don't know, today's data in the US perhaps, but manages to clear this area, then the air will open up, I think, for a move back up to probably 66 in mid 66s. And why not have a retest here and in those prior lows here? That would be around 66.80, where we also find a bit of moving average activity. So, but it really needs to clear this area, because otherwise it's just going to continue to hop around with 65.70, 65.60 on the downside. And there's a lot to do on the options front as well in this zone. So it could have to wait until after expiries to perhaps take its next direction.
Yes, there's just over 4 billion going off between 65, 60 and 80
Quite a
today
lot.
in the Aussie dollar. So yeah, won't be surprised to see it glued down here as it has been for a week.
Quite a lot. So yesterday I was saying like the Kiwi coming back into the cloud and was looking a bit fragile, but then those numbers turned it all around overnight, and then the dollar being weaker did the rest. But we have this 61.40 to 61.55 to reckon with on the Kiwi dollar to really clean get some clean air here, and that's one that comes from a while back, back in 2022. It had broken up, accelerated, came back to retest it, bounced, and then when it broke, it really broke down. So I think it's interesting enough, this 61.40 to 55 zone on the Kiwi. All right, this is one that I'll be keeping an eye on. In the meantime, these little fips here held the support. So support around 60, 60, 60, 65. Quick look on what's happening in especially silver, gold. Where's gold? I didn't even look at it. Yeah, it's still turning around 2030. We did have a look back below 22, and again, it couldn't hold below. And now we are back above this little bit of a line here. Still very much in a range to me, but interestingly enough, and we will know on US data this afternoon, we've got tomorrow, what do we have? Oh, the durable goods, okay. We have the PCE prices tomorrow, and then on Friday we will have the PCE data and the personal income and stuff. That could be a bit of a decider for what's happening on the metals as well. And I'd say, based on what's happening here, it's trying to find the base, I reckon. Okay, so if we get another test of this and hold again just below 22, we could be in for a bit of a move higher. Really, mate. You've covered the cable and the euro sterling. I'm not going to repeat that. It's that's done. Just one here. Low 187s on the sterling yen continues to find support. Okay, so we could be just in a bit of a, how do you call it, flag pattern, whatever. And if we start to get back above those high 188s, we could be off to the races again on sterling, you know, right? If the sterling keeps its bid, because we just had those CBI trend industrial trend orders out coming in quite weak, and sterling is giving back a little of its shine right now. But that did we already is that already the end of the UK exceptionalism? We had a couple of good numbers, and now we're already back in the crap.
The CBI is always a glass half empty number from that lot there. Yeah, so I wouldn't pay too much attention to that. But yeah, cable's moving. Did you want to have a look at the S&P in a mo after you've come to Swiss?
Oh yes, we have to. Okay, so the S&P broke up. Really, it broke up again. And there's one here. So I was saying that I think we are in a very big channel here now. I think 48.05, but already that prior high here, I've already hidden my stop on my longs just below here. But if it goes back below 48, the party may be over. In the meantime, we're pushing on. And we are pushing on to the 1.618 of this setback that we saw in the second half of 2023. We are pushing on into the 1.618, and I've seen other people look at this 49.20. I'm going to be a happy camper if we get up there for this round. I'm not saying that we can't reach 5K. Of course we can reach 5K. We can reach 5,200 as well. But I'm going to be a happy camper because I don't really know whether it's going to really go in a one line. So this is an interesting one that I'm really paying close attention to as a level. And that's it. Back over to you, mate.
Thank you very much, mate. Yeah, got some interesting times happening in stocks. Certainly, it looked like it was failing yesterday, the rally, but now it's picked up again. Right, I've not got much more to add to all that wonderful info from Sir K-Man over there. So we will call it a day. Ali, thank you very much. Have a great day, everybody. Thanks for coming and supporting us here at the Flow Show. Cheers, Kate, as always. And we shall see you all nice and early tomorrow. Have a good one.
Thanks, guys.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.